Welcome to a brand new show of Markets Tomorrow. Tomorrow we start a new series, a new month. Auto dispatch numbers and cement dispatch numbers are also due. So what exactly could influence and impact your portfolio tomorrow? We'll discuss that for you on this edition of Markets Tomorrow. Joining me on the show today, we've got Pratik Gupta, Head of Equities with Deutsche Bank, P. Fanishekar, Fund Manager with Angel Stock Broking, and Sandeep Agle, Founder and Managing Director of Appetite Technical Advisory Services. Sandeep Agle, you go first. First, a word on the technical setup. How are things looking?
Well, the same as they were over the last week. We have been saying that the Nifty will not move anywhere. It will be in the 6,000, 6,050 band, and the expiry has happened exactly somewhere in between that. Having said that, I see this phenomena being extended. I think this could be there for the next week or 10 days, where I don't think 5980 on the downside would be broken, 6080 on the upside, or 61 on the upside. So that 120 point band, and you see how a PNB moved in spite of the Nifty. So actually the Nifty is not a true indication of how the stocks are moving. So be stock specific. Totally, you will have stocks on both sides, and Nifty will be in this 100 point band.
Funny, what is your understanding in the run up to the budget? Do you think strength will dominate Indian markets or volatility will dominate Indian markets?
Good evening. We can't really call volatility, especially because a lot of it is expected to come from global shows, and the seas have been very calm there over almost 3 to 6 months now. So that's something which is a joker in the pack. As far as expectations are concerned, I guess a fair bit of positive sentiment is already being built into the pre-budget expectations, because you have the finance minister who is almost on a daily basis assuring investors that the budget will be responsible and fiscal deficit targets will be adhered to, not just this year but even sensible fiscal deficit targets will be kept in the year to next year. So to that extent, I guess as you near budget, the element of surprise on the positive side at least will be restricted. However, if things were not to pan out as per the market's expectations, expect a violent reaction after the budget. But let's give the benefit of doubt to the government at least for the next 1 month or so. So in the absence of triggers both on the domestic and global front, I would more or less agree with Sandeep that the market, as it is looking fatigued, a little bit fatigued at the higher levels, is also not ripe to go down because the valuations are not really very expensive. And within the broader complex of the market, you have stocks like PSU banks that you just saw today, which keep rallying in order to keep the broader Nifty more or less in this range of 100-150 points. So it's a good time for investors to do bottom-up stock picking. But on the headline level, I don't see much movement.
Well, what a day it was for PSU banks, and we'll discuss some of those PSU banks individually. But right now, let me encourage Pratik also to join in, in the discussion. Pratik, what has differentiated Indian markets from other markets for the year gone by was liquidity. So if your view is that global liquidity has started, do you think that could challenge the liquidity setup? Because as of now, Indian markets have managed to attract money because others are not growing. But suddenly if the world, gets their act together, could that challenge the setup?
No, that's a good question. I think a couple of points over there. Firstly is the underlying outlook for equities. We're more bullish on equities versus bonds. At the same time, when I say the global markets, and I was talking more about markets rather than the economies, from an economic standpoint, global growth is still going to be very weak. In fact, in the Eurozone, we expect a modest contraction in the first half of the year. So what's happening is a lot of the export-oriented markets are actually still suffering from low growth, even here in Asia. And also even in China, where we are seeing a recovery, we expect it to be driven more by the shift towards consumption, not so much as investments. So overall, there's still a lot of excess capacity in a lot of the other markets. A lot of the commodity-oriented markets are not likely to do as well. So India really stands out as one of the key, or one of the large emerging markets, which is largely consumption-driven. And the issues which were plaguing India were really of our own making, our policy paralysis and so on, and the fiscal deficit, etc. So those things, as they're reversing, that's what led to the first leg up in the markets. And as more of this unfolds over the course of 2013, we think India will continue to do very well the rest of 2013 as well. So I think really it's a difference between, given our market structure, our economic dependence less on exports, more on consumption. It's more of a services-driven market. And also, obviously, valuations last year were overly depressed, and we were still going through an earnings downgrade cycle. That, in India's case, is bottomed out, and we think we're probably heading upwards now.
Okay, the big story today was PSU banks, and after PNB numbers, we saw a massive bout of short covering in Union Bank, Bank of Baroda, Allahabad Bank, Central Bank, just about everything which has a prefix PSU, appreciated on very strong volumes. Sandeep Agle, how would you characterize today's price action and volume action in PSU banks? Just a one-day wonder, or we could now be staring at a meaningful trend?
No, it certainly can't be termed as a one-day wonder, because after a correction it has bounced back. Of course, I think what happened in PNB was a little overdone, but a Union Bank, there seems to be some more upside. I mean, a very clear 5-7% trading upside at a level of 255. I would talk of a target of 268 to 270. So yes, there are some stocks which are staring at a trading upside of 5 to 7%, and I would pick Union Bank of the lot.
Funny, you've been a big fan of the private banking space, not the PSU banking space. But at the current juncture, do you think in the near term, when I say near term, for next 6 months, given the way, how bond yields have cracked up and how under ownership has clearly surfaced up, do you think PSU banks could outperform private banks?
I don't think so. If I were to just address the question of yields, I'm not looking at a sharp reduction in interest rate cycle for many of these banks to really profit on the treasury front. As far as today's results of PNB is concerned, which led to this huge rally, if you go into the details, you will not at all be impressed by what they have reported. So while the headline numbers tell you that the gross NPAs have remained stable, the restructured assets, which was my primary concern all along, which was about 4,000 crores at the end of September 2012, has almost doubled to 7,700 crores as of the end of December 2012. So what the bank seems to have done is they have proactively gone and restructured all these suspect accounts and ensured that the gross NPA more or less is at manageable and presentable levels. So I'm not too impressed by what they have reported. This is more or less the trend with all PSU banks, where either they have taken a large hit on their gross NPA figures, or they have very smartly, proactively gone and restructured. So I don't see how the next set of the other PSU banks led by SBI will be very different. So I guess as investors brace up to this, I think the stock valuations will revert back to the more normal levels, and you might actually see a large part of today's gain actually be given back.
Funny, tomorrow there are two important events. First, Bharti numbers, and then auto dispatch numbers for the month of Jan. Let's discuss the first one, and then we'll discuss auto dispatch numbers after that. What are your expectations from Bharti?
Well, the results are not expected to be anything special if you go by the results of IDEA. While they will benefit from the tariff hikes that they have effected, but I don't see the sum total of these results affecting Bharti stock price by 2% on either side, because the concerns out there are clearly medium to long term in nature. What is the cost of doing the existing business over the next 1.5 to 2.5 years? So the concerns out there are more on the balance sheet side rather than what happens on the P&L side. So, for the time being, I guess longer term investors would continue to avoid telecom, and Bharti is no exception to that.
Now for the Jan series, Reliance has emerged as a big smart outperformer. Reliance for the Jan series, Reliance in the Jan series has appreciated by a good solid 9%. Now the Nifty was up little over 2%, the Sensex was up little over 3%, but Reliance this month has appreciated by 4% plus. But if I map what Reliance has done in the entire series, it's been a massive outperformer. Pratik, I understand that as a house, Deutsche Bank is bullish on oil and gas as a sector, but within the oil and gas space, what exactly are you bullish on? Which way are you leaning? Which way are you tilting?
See, over there, I think really there are the 2-3 broad themes driving our preference for oil and gas. Firstly is government policy action, which is cutting of subsidies, giving approvals for capex, and also capacity expansions. And we also expect a slight pickup in refining margins this year. So you'll have different companies playing out to different themes, but generally I would say the upstream companies and also the refining companies. That's where really our companies which have a high exposure to petchem refining and companies where projects were stuck because of capex approvals. I know yesterday the CCI meet was a bit of a disappointment, but I think as the year progresses, we'll see more of these capex approvals coming through. So I would focus on companies which are bearing a heavy burden on subsidies, and also on companies where you've got capex stuck, and that's where these are the kind of companies which will do well this year.
Prateek, but between Reliance and ONGC, which one are you bullish on a relative basis? Reliance, they have a problem when it comes to the E&P production, but for Cairn, the problems are slightly different. They have issues when it comes to oil production.
We wouldn't be able to comment on specific stocks, but we would generally like both of those companies.
And IT, Prateek, are you bullish on IT? Because when we started the year, the general opinion on IT was rather negative. But after the kind of management commentary we've got from Infosys, TCS and now Wipro, are you reasonably confident that 2000 will be a good year for large cap IT stocks?
Yes, I would just make one observation before I talk on IT, the stocks over there. I think one factor which I think is going to be supportive of the IT sector is that India still has a relatively large current account deficit, even by India's own historical standards. So that, in my view, should limit the scope for rupee appreciation this year. So that's a little bit of a potential upside to analyst estimates if the rupee stays flat. Most analysts, including our own, are assuming a modest appreciation of anywhere between 3 to 5% this year. So one is that. Second, as I said, while the US and the European economies are getting somewhat better, they're still in a very, very slow growth, or in the case of Europe, even a modest recession in the first half of this year. So in that sort of an environment, there's greater pressure on outsourcing, cutting costs. We are seeing the first signs of that. Discretionary IT spending is actually beginning to pick up. Pricing is beginning to come back. And a lot of these IT companies have actually, the capacity utilization rates are running quite low. So there's potential for upside surprise even on the margins front. So generally, most of the large caps, we are actually quite bullish on the IT companies, and we're above consensus on a lot of these companies.
Sandeep, Suzlon is on a tear. How much more for Suzlon before it hits a stumbling block? Because on a daily basis, I'm surprised with the strength, with the price action, with the volume action, and even with the delivery percentage.
Well, looking at the way it has moved today, I think I would set the target at anywhere between 28 to 30, currently at 24, 24 and a half. I would talk of the next target at 30. And who knows, beyond that, once it closes above that, and if we get supporting volumes and it stays above 32, 33, then probably 45 could be the next target. But as of now, I would cap it at 30.
So 30 is a conservative target or a realistic target?
Well, at 18 and a half, when we had a buy, we had a target of 24. But looking at the momentum today, specifically the price and the volume built up, I would say it would be a realistic target, and your 21 can be a good stop loss, so you can buy it on declines to 23. You take a risk of around 2.5, 3 rupees and play for a 7.5 rupee upside.
Funny, every time we discuss Suzlon on ET now, why do you shake your head? Either you don't like the stock or you miss the rally?
No, I don't regret missing the rally in Suzlon. See, clearly this is not a portfolio stock, so not that I'm too disappointed with the way it has rallied or it has come down. The issues with Suzlon are clearly different. So while the rally currently is because of they having convinced their lenders for a CDR mechanism, the real turnaround in Suzlon will only happen once you see their order book significantly improving, because over the next 2.5 years roughly, they need to repay almost close to $2.5 billion. And that's not going to be easy. So while you have seen the order flows in dribbles, that needs to increase a lot for us to be positive on this topic.